What's up, YouTube? Welcome back to the absolute nightmare that this week has been in terms of the market. My name is Cowboy Cayman, and my God, am I excited to be back with all of you. Maybe not for what's going on around us, but I'm happy to be back with each and every one of you. I've taken a long time off, got to a new setup, and my God, am I excited to actually show you guys the project I've been putting a lot of time, research, and energy into. It's how to invest for the coronavirus. As of the time of filming this, guys, the Dow has just dipped under 24,000. The first time it's been there since November 30th of 2017. Let that sink in. Several years worth of gains have been erased in the matter of weeks. So what do we do to fight this? With certain gas companies, tech companies, just general well-being companies tanking due to the coronavirus, it's important to look at what makes up your portfolio. If you are heavily invested into the gas market, as I was several years ago, big hits can make huge ripples through your portfolio. There's no reason to lose 20, 30% in a matter of weeks just because of poor diversification. Simply putting it into retail, electronics, healthcare, gas, giving an even spread to a large pool of things will help protect you in times of uncertainty, which this is a clear example of. The coronavirus has, in a way, been a very good stress test on the portfolios of a lot of different individuals lacking the proper diversification. Well, obviously, bond interest rates are at an all-time low, with the Fed cutting it to below 1% for 30-year Treasury bonds. It's never happened in the history of America. So it is a time to think about what is in our portfolio and what we're invested in. And is it truly a worthwhile investment if stuff hits the fan? Because at the end of the day, it just might. Well, obviously, I'm not saying to take all your money out of the market and put it under your mattress, because that's not gonna do any good for anybody. It is important to realize that a well spread out portfolio will help protect you in times of uncertainty. Maybe that means gold, maybe that means bonds, maybe that means ETFs, stocks, and a whole batch of other things. Having that well spread out across many avenues of success will lead you to such more success. So now at this point, you might be asking yourself, what would be a great way to diversify my portfolio? In my honest opinion, I think now is the greatest time to take advantage of these very underpriced companies that have taken massive hits in the market in the last few weeks. I'm talking about energy sector. I'm talking about certain technologies that are actually rather heavily based in China. Well, obviously, this coronavirus will continue to spread and unfortunately probably cause more hysteria than it already has within the media and the world. It is important to look at these companies in a very objective sense. Are they going to be around after this virus is over? At the end of the day, most likely, they probably will. So if that is the case, it is worth looking into why did they lose so much money? Because their very short-term profits might be low? That doesn't really mean much to us who are looking at this objectively. This actually ties in very well with the next point I wanted to make, which is to invest in companies that provided dividends, and not only provided dividends, but increased the dividends over the years. Companies such as Johnson & Johnson, Walmart, Coca-Cola. These are just a few to name some quick examples, but they've consistently not only paid their dividends, but the dividend rates have increased over the years. This helps combat both inflation and the hysteria that comes with the market, because even if the stock dips, these corporate giants will not be getting rid of their dividends. So there's three main companies that I would like to look at today in terms of the dividends that they both pay out and the consistency in which they've done so. It's Johnson & Johnson, Colgate, and Procter & Gamble. These three absolute giants of their industry have not only paid dividends very consistently, they've done so for over 55 years. So they've seen the recession of 2008, they saw the stock dippage in 2017. All these things they witnessed, they went through, they can still continue to pay their investors. So first I'd like to start with Johnson & Johnson. They have a rather large hold in the healthcare industry, making things such as Band-Aids, Listerine, Tylenol, to name a few of them. They have a very large footprint in their industry, and they will continue to do so even if the coronavirus makes every other healthcare company in the world just dissolve. So I know it's been said in the news a lot that the coronavirus will impact and really stress test the US healthcare system. Let's be realistic. There will probably reach a time where the coronavirus will impact us on a day-to-day basis. I'm talking about less social interactions with our friends, family, loved ones, whatever. There will come a time when our daily lives are impacted by this coronavirus, whether we like it or not. The World Health Organization has said it, CDC said it, Donald Trump said it. So what companies would benefit from the coronavirus impacting us on a day-to-day basis? It'll be companies such as Johnson & Johnson, Procter & Gamble, Colgate, people that make products that we use on a very, very consistent basis in our day-to-day lives. Those are going to be stockpiled. You see and you hear about the doomsday preppers preparing for the worst of the worst when the coronavirus breaks onto the shores of the US and kills everyone. That's dour. Well, obviously, that's not going to happen. These companies make products that people use on a very consistent basis. And when some of these products, such as Listerine, hand sanitizer, wet wipes, are being hoarded by the absolute hugest metrics you can possibly think of, when store shelves are full of them, they're gone within a day. These are the companies that you need to have in your portfolio to help brace for the potential onslaught that this coronavirus can still provide. Procter & Gamble, Colgate, and Johnson & Johnson are great companies that would make a profit from this unfortunate circumstance. And the last thing I'd like to talk about, guys, is just to have confidence. Not only confidence in the market, but your fellow human beings. We will get through this. There is no need to make rash decisions with your money, which you can regret when the stock market inevitably rallies. Every bear market is completely outshined by the following bull market. It has happened time in and time out. Time in the market always, always, always outweighs time outside of the market. There is no reason for any of us to try and judge when the market will rally, whether it's a week from now, whether it's a year from now. It doesn't matter. The more money you can put into the market, the more it will pay off for you in the long run. We've had already one of the biggest dips in the stock market's history, and it rallied the next day. There is no reason for you to panic and keep only 5% of your money in the stock market. Now is the time, if any, to pump yourself full. Make that Robinhood account as big as you humanly can. It is important because at the end of the day, these are discounts we're getting on stocks because of irrational fear. PE ratios say that. A lot of other statistics in the market are telling us this. Stocks are undervalued right now. Do not hesitate to take advantage of what could be a great opportunity. It's unfortunate that we have to call it that, but it kind of is. At the end of the day, this is giving us a great saving opportunity to hopefully make a lot of money. Thanks again for watching, guys. My name is Cowboy Cayman. If you could, please smash that like button and do not forget to subscribe and hit the little bell notification so you can stay up to date with all things Cowboy Cayman. You'd hate to miss another coronavirus update. Thanks for watching, guys. Here's to the next one.